Almost everyone in the world today knows about Bitcoin, and like Oliver Twist, almost everyone wishes they could have a little more. But Bitcoin doesn't grow out of the ground or on trees. It is mined digitally, and the good news is that you too can start mining Bitcoin today. Bitcoin as a digital currency works in a decentralized way. It means there's no permission or central bank involved. In fact, cryptocurrency rests on a widely used technology, blockchain, in order to ensure a reliable system. In today's video, we shall review the extraction process, the tools needed, and the rewards that come with Bitcoin mining. So put on your seatbelts and get ready for an exciting ride. What does Bitcoin mining mean? It is the backbone of the whole Bitcoin network. It offers a primary purpose: hiding activities and taking new Bitcoins. Envision a huge, freely available register where every transaction involving Bitcoin is rationally and correctly recorded. That is the blockchain. Miners act as its bookkeepers, repeatedly changing the new deals around the clock. Here's how it works. Whenever you buy a coffee cup with Bitcoins, the transaction is broadcast to the whole network. Miners try to beat each other all the time by settling a very difficult mathematical problem known as the proof of work, POW. This process demands vast computer power, and the first miner to break the formula gets to add a new block to the blockchain, including a group of verified transactions. Think of each block as a new page in the record book. The winning miner is rewarded with a specific amount of newly made Bitcoins, presently 6.25 per block. This reward is how new Bitcoins join circulation, with the total amount set to 21 million. Solving the POW task isn't only about getting gifts. It also protects the security of the network. Each block is cryptographically linked to the previous one, creating an unchangeable chain. If someone wants to mess with a transaction, they'd have to change the whole chain, which becomes nearly impossible as the network grows and more blocks are added. So miners not only confirm transactions, but also work as security guards for the whole Bitcoin system. It's vital to note that the difficulty of the POW problems automatically changes based on the processing power available on the network. This ensures that new blocks are presented at a steady pace, usually every 10 minutes. As more players join the network, the complexity grows, making it ever more demanding to solve the riddles and collect prizes. Why mine Bitcoin? Let's move further by studying the mining function. Now that you know how it works well, you might be interested in why someone would choose to join. Above all is the fact that the best reason to get paid in Bitcoin is the possibility of coming home richer. Each shifted stack brought about the currency's flow into a constant circulation scheme. Furthermore, a miner becomes a guard of the Bitcoin network, which is an extra benefit. Users who check transactions and their security by trying to solve POW problems continue the chain, thus keeping the general system's health safe. Moreover, mining takes place in a decentralized way and contains the Bitcoin infrastructure. It is a group that doesn't have a single power running the network. There are separate people that have come together to keep the system of this electronic money. It is important to know that though the physical impact of mining is very small, mining isn't the only way to get Bitcoin. Scarcity is one of the reasons for the high value of this type of object. You can get it on coin platforms. There are several cases of profit coming out of Bitcoin mining, which is quite attractive to many buyers. But the degree of success in this field is entirely dependent on how well you plan. The cost-benefit ratio, CBA, is the main factor that affects revenue, which includes the full understanding of how much the services or things given cost for the customers. On the financial side, you'll need to take in energy bills to run your mining machines. This may be a big task, especially with rising energy costs. Next comes the initial cost of the digging tools itself. Mining trouble is another key element. This refers to the difficulty of the mathematical problems that miners must answer. As the new trend of miner movements happens, the difficulty is adjusted in the system in order to keep the block production rate fixed. This suggests that with time, it becomes more difficult, and the technology must offer more complex methods for answering the questions and getting benefits. Later, though, the price of Bitcoin will be high. However, the expensive Bitcoin price matching with the increase in profits will make mining profitable, while the fall of the price would make it very difficult for you to gain income. Hence, this part will likely be about tools. There are three main choices for mining Bitcoin, i.e. CPUs, central processing units, 2. GPUs, graphics processing units, and 3. ASICs, application-specific integrated circuits. CPUs have also been considered by miners, and they only make quite a low share of the revenue of crypto mining. GPUs controlled the business, but now ASICs are the way to control the market. The ASIC machines that are created for Mincoin are highly efficient, but on the downside, they have a very high price tag. In such a case, when you are a beginner or don't have API access to top-range ASIC devices, don't be sad. There are also other cryptocurrencies with the possibility to be mined with less high-tech options, like GPUs. The pool then shares these benefits evenly, based on the computing power each member offers. This gives a more steady earning potential compared to solo mining, where the chances of fixing a block on your own might be relatively low. Setting up your mining operation. After this, you would pick the mining program and examine the data or figures, and then you would need to set up your mining business. The first step is getting a trustworthy home for your hard-earned Bitcoin, a crypto wallet. There are two types of digital wallets which allow your Bitcoins to be kept safe and secure. One is called a hot wallet, whereas the other is called a cold wallet. Hardware wallet is the most trusted one, and it suggests that as a real USB drive would do, the keys of your private wallet stay offline and safe from breakouts on the internet. In contrast to software wallets, which are simple and free as you don't have to pay transaction fees, they store your private keys on your computer or your phone, making them somewhat better targets. Choosing a mining pool will be the next step, which is basically working together with other miners. Research well to find affordable groups. With my position, I will choose the pool that has factors like cost, size, and reliability. To become a pool member, it is generally a popular thing to do. In ordinary cases, you visit pool's site, create an account, and hand over your wallet address. Next, the pool will explain and show you step-by-step the process of how to set up and design your mining software to connect to their network. This, on top of the mining program, is the bridge that ties the Bitcoin network to the mining gear in the pool. It gets work from the pool, orders your hardware to solve the POW puzzles, and gives answers back to the pool. Downloading mining software is an important step, but be careful. To avoid bugs, always receive them from the official developer's website or reliable sources. Once downloaded, the setting step typically entails entering your pool's data, your wallet address, and picking the gear you're utilizing. With everything set up, it's time to improve your mining efficiency. Here are some important strategies. First, try boosting your gear with care. This method pushes your hardware beyond its original settings to possibly boost its hashing power, but be aware of overheating and possible damage. Proper airflow is vital to prevent your gear from burning and keep smooth working. Monitoring your mining process is important. Various software apps may give views into your hardware's speed, hashing rate, and power usage. Regularly tracking your power use is crucial to guaranteeing your mining activities stay profitable. Remember, successfully handling your setup may dramatically influence your bottom line. Challenges and alternatives of Bitcoin mining. While the draw of making Bitcoin might be strong, going into mining comes with a set of natural risks and hurdles. Understanding these hurdles is important before getting in. One of the major problems is the constant dance between revenue changes. The price of Bitcoin sees huge swings, directly affecting the value of the created coins. Even if you successfully crack a block, your gains may fall if the Bitcoin price drops. Adding another degree of complexity is the thought of mining trouble. As more miners join the network, the difficulty of answering the mathematical questions needed to prove transactions grows. This means you continuously need to improve your tools or risk falling behind the competition. These elements together may quickly turn an apparently successful business upside down. Another big barrier to entry is the original cost of specific mining gear. These devices, usually called ASICs, application-specific integrated circuits, are expensive and demand a large investment. On top of the initial cost, there's the constant load of care. These high-powered machines make a lot of heat and need proper cooling systems to work efficiently, adding to the running costs. Perhaps the most worrisome part of Bitcoin mining is its environmental effect. The process uses huge amounts of energy to power the ever-growing network of mining rigs. This energy use has drawn criticism, with fears that it adds to climate change and puts pressure on already stretched power systems. If the standard mining method sounds exhausting, there are alternate ways to join in the Bitcoin community. Cloud mining allows people to rent processing power from big mining hubs. While it offers an easier starting point, cloud mining comes with its own set of issues. It's through a third party that you rely, and something that may happen to them, like getting bankrupt, can affect you badly. For those looking for a less resource-consuming option, several blockchains have a system called proof of stake, which helps in transaction verification. In a proof of stake process, users deposit their current Bitcoin reserves to confirm deals. The more coins are staked by an individual, the higher the chances of being picked for confirming the block and receiving the prize. We've studied the world of Bitcoin mining, showing both the potential for profit and the huge risks and hurdles involved. The Bitcoin mining world is constantly changing, with technology changes and legal developments on the horizon. Stay aware and change your plan properly. Like this video? Subscribe for more material like this, and leave a comment below with any questions you have about Bitcoin mining or the future of cryptocurrencies. Thanks for watching.